We're talking about B waves today. Now, my office is in my kitchen, and it's a Sunday. My family lives here too, so you might hear some little bit of noise in the background, but that's nature of the beast when you're just a regular dude putting out awesome information. Now, you might hear some sounds like this. That's the sound of ice cubes hitting the bottom of my glass. Because before I get into B waves and all the signs and symptoms thereof, I'm going to have to pour myself a glass of whiskey. There we go. Now that we got the glass of whiskey ready, got to pull out my vape. Keep the nerves settled, if you will, because I'm addicted to nicotine. So that being said, let's dive in to the charts. Now what you see in front of you here is a chart of the Dow Jones Industrial Average. We're going to go over a lot of charts today, but we're first going to look at the Dow Jones Industrial Average, because the signs and symptoms of a B wave are that, firstly, something is wrong, right? So you just can't place your finger on it. It looks a little bit messed up, but the more you look at it, the more you look at it, the more you realize that there's definitely something wrong with this market. How? Why? Why do you say, why is something wrong with this market? Well, we have a couple problems across all the indexes. But the first big problem we have is that we are barely touching just the D wave of the prior degree. We come down in what appears to be a triple zigzag and just barely touch the tippy top of it. Now, technically, does that meet the guideline? In all technicality, it does. Although most times you reach more towards the terminus of the wave, which would be down here. Now, does it have to get down there? No, it's not a rule. Okay? But there's something wrong, because it took a triple zigzag just to barely touch it, which is kind of strange. I would expect if the entire correction for a wave 4 was a triple zigzag, then it would take that to get down well into the guideline. But it didn't. It took that just to barely nip it. The resultant price action, okay, is fully contained within parallel lines. A very big indication that this is a 3-wave move and not a 5-wave one. Okay, that coupled with the fact that this middle wave here that I have labeled as a sub B wave of this B wave is not 5 waves. It cannot be, and there's no way to make it 5 waves. Okay, meaning that all of this is one thing. All of this middle section is one piece to the puzzle. We're going to get into other things later, but the more you look at it and the more you count it, and something is wrong. This is not as bullish as it's supposed to be, right? We should be absolutely soaring right now in a 5-wave structure, and it's not. It is fully contained by parallel lines. So, yeah, something is wrong here. The next symptom of a B wave is that it is driven by a very narrow list of stocks. If you can take out, say, the Magnificent 7 stocks, I'll tell you what, let's go look at an index that doesn't contain those stocks and let's see what it looks like, namely the Russell 2000. We have the same high over here in end of 2021, yet we're only halfway through retracing that move down. Well, those 7 stocks aren't in this index, but they are in this one, and they are in this one. So therefore, all this price action here, and I don't have the NASDAQ pulled up, but it's the same thing. Let's look at another index that kind of buries those 7 stocks. Here's the New York Stock Exchange composite. Every stock that is a part of the New York Stock Exchange is in this composite index. This one didn't make a new high. Something is wrong with this market, and it is unconfirmed by the other indexes. Usually, B waves or second waves, okay, B waves being second waves themselves, will experience the same psychology of the market or exceeding it than the prior high. Let's look at Bitcoin. You made your high, same time period, late 2021. Some of it, like the S&P, was very early 2022. Was that January? Yeah, January, right? We have Bitcoin here. It was November. Same time as the Russell. Same time as the New York. No, composite made January. Russell was November. Okay, Bitcoin also November. Experiencing. So you can remember back and say, what was Bitcoin like with 70K? Everyone was in love with it. Give me more, give me more, give me more. To the moon. How many people, when you go through the crypto Twitters and YouTubes and all that right now, are so scared that we're going to plummet? Or is the psychology now the same or even greater than the psychology experienced here at $70,000? You can answer that question yourself. Yet another asset that move off of its low is fully contained within a parallel channel. You can look at the S&P 500, double zigzag structure, fully contained within parallel lines. Right? Little throw over here, right back into the channel. Little throw under here, right back into the channel. In theory as well, since this is 2 zigzags connected together, each zigzag alone should also be contained by parallel lines. Let's check it out. This one was started here. There's the B wave. Let's drag it up to, oh my goodness, P gracious. Fully contained within parallel lines. Impulse waves are not fully contained within one set of parallel lines. You need 2 sets to contain them. One for the 3-wave move up to wave 3, and another one for the 3-wave move up from 3 to 5. This entire move, in its entirety, is contained by parallel lines. That's the S&P 500. It's the Dow, fully contained by parallel lines. The Russell, contained by parallel. This is a flat pattern, okay? Slight throw over in the C, right back into the channel, back test. I think you know what's next. Take a sip of whiskey. Oh, that's good. Unconfirmed by other averages. A little thought experiment here. I have another chart to show. I made this one up, all right, but I did a little thought experiment and I went back in history. We have the NASDAQ 100 that is comprised, I think, more than half of those magnificent seven. Okay, the seven stocks that are driving the entire market. All right, the point of this whole video is that is not a healthy recipe for success of a market, by the way. But more than half of this NASDAQ 100 is comprised of those seven stocks. And on the bottom is the broad market, okay, the Russell. This is the Russell 2000 on the bottom in orange, okay, and this is on a weekly closing basis. What we have here since the prior high and up till now, we have the NASDAQ 100 comprising of half of those seven stocks making a new high. Yet the Russell 2000 not only didn't make a new high, it's already started down. Okay. A non-confirmation. This is what the book means by unconfirmed by other averages. Here's the broad market at large with a subset of 100 of them that are inappropriately weighted, making a new high. Non-confirmation. So what I did is I went back in time and I said, well, what about all these other times? See if there's other times that the NASDAQ 100 and the broad market as a whole, being the Russell 2000, had non-confirmation highs. Didn't have to go too far. I went back between 2018 and 2020 and I found the same thing. Now these are all of the occurrences, by the way, that I've highlighted. So what did that result in? Well, that non-confirmation resulted in a about 40% crash in the Russell. Okay, and what, about a 25% in the NASDAQ here on a closing basis, about 30%. 30% crash in the NASDAQ. Okay, let's go back in time. Here's a smaller one, smaller wave also, but still it happened, so I'm highlighting it. This is internal to all of this wave up, but it was a thing that happened. So being a smaller wave, we can expect a smaller crash. However, we still have a non-confirmation between the two. NASDAQ making a higher high, the Russell making a lower high, which resulted in about a 17% crash for the NASDAQ. Okay. And about a 25% crash for the Russell. Here's the next non-confirmation. Okay, this was at the top of the Great Financial Crisis, or the 2008 crash, as we like to call it. Okay, non-confirmation. NASDAQ makes a higher high, Russell makes a lower high, which resulted for the NASDAQ in a 52% crash, and for the Russell, a 58% crash. Okay. Now that's it, actually. That is all of the times. Go back in the history all the way back, and we don't have any non-confirmation other than that. But all of these things have one thing in common, with the exception of this smaller one here. All of these, okay, are B waves. Right? Every stinking one of them. This was a B wave. This was a B wave. This is a B wave. All of them are B waves. So every time the Russell and the NASDAQ have had a non-confirmation with the exception of this one right here, which actually may have also been a B wave. Okay, but a B wave internal to this move here. Okay, I'd have to go on a candlestick chart and count that. So that may be a B wave as well. But regardless, they're all B waves. And I am calling, this is a call of mine that I'm making right now, in case you're not picking up what I'm putting down. I am calling right now that the stock market is in a B wave. Okay. Now that's not all though. There's something else that's kind of cool that I want to show you. Let's go to the monthly chart. If we go to the monthly chart, then that little one that we were looking at over here disappears. On a monthly closing basis, we don't have the non-confirmation. Okay, but we do have it still in, I don't know what happened to my little trend liney thing, but we do have it still here in 2008. Okay, we do still have it before the COVID crash. Okay, I believe, or maybe that disappeared too. Hold on. No, it's still there. So between here and here, and here, and here, and of course, very much still today on a monthly closing basis. Well, what's very interesting is that if we go to, say, a semi-annual chart, all of the rest of those disappear. Oops, that's 6 hours. My bad. 6 months is what I want. There we go. So the rest of those non-confirmations disappear on a 6-month chart, because on a 6-month basis, those waves were just plain too small at the top. But what's interesting is this is now the first time ever, maybe the only time ever, who knows, that on a 6-month closing basis, that the NASDAQ 100 has created a higher high, and the Russell 2000 market at broad has not confirmed it. Me personally, I wouldn't buy any of this market if I had all the money on the earth. I wouldn't buy it with Warren Buffett's money. So there we have it, folks, in a nutshell. That's what B waves are. And what I'm trying to show you, and in all these markets, we have the Dow Jones, a 3-wave move contained by parallel lines. Bitcoin, a 3-wave move contained by parallel lines. The S&P 500, a 3-wave move contained by parallel lines. The Russell 500, a 3-wave move contained by parallel lines. And as far as this didn't go, you still got a throw over, which is actually preferred. You want a little throw over that comes right back into the channel. Back tests it and continues on. The New York Composite, contained by parallel lines. I didn't even put them up because it's so contained. Not even close to breaching the top of this yet. It's so contained. Can't be trading the stock market or the crypto market or any market for that matter on hopes, wishes, and dreams. You got to look at the evidence that sits right in front of you, staring at you in the face right now. All of these things, check, check. Here, I'll use my marker. Check, 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 check. all check marks off the list for a B wave. I didn't make this stuff up, guys. I'm just the messenger here. I'm just interpreting the chart for you and letting you know what I see. This is what I see. This is unbiased, raw analysis. Now, what can we expect going forward, right? Not every index has to have the same pattern. They can be different, okay? But they need to have the same trend, okay? And if the trend is down, okay, which this would insinuate that it is, then they will all give us the same result in the end. If this is 3 and this is 3, you can only get one thing, and that's 5. And we've also expanded above the top of A. So what that allows the market now to do is everyone celebrates because you've made a new high. What that means for a B wave is that you've opened the possibility of an expanding flat. And an expanding flat does exactly what the name suggests. It expands. So you should expect a 5-wave expanding move down. 3, 3, 5, expanding well beyond the end of this A wave. To meet the previous guideline, which is the bottom near the terminus of the previous 4th wave, which is here. Now the terminus is way down here. Can it get there? Absolutely. Does it have to? No. We're just going to count and see whenever 5 waves is done. Okay. Maybe it only gets, to here. That's fine too. It's going to confuse a lot of people though. And when all the other Elliotticians see 5 down, they're going to be like, there it was. That's it. They're going to force 5 waves into this, which can't be done, but they're going to do it. And they're going to see 5 down, and they're going to say, oh yeah, give me that pullback, baby. Give me that 3-wave pullback, and the whole market's going to short it. And the psychology is going to be, oh my goodness, this is not over, and you're going to get a 5-wave move up. But everybody's going to think it's 3, and it's going to come back down. And, oh, I knew it. I knew it. I knew it. We're going down. It's awful. Sell, sell, sell. Same thing we're talking about now. Use the same exact list right now. Here. Something's wrong. This decline is driven by a narrow list. We're experiencing the same psychology at the previous low. Everybody says it's sell, sell, sell. It will be unconfirmed by other averages. Time to buy. Here we go. Okay. But that's well ahead of us in time. Because other indexes such as the Russell, who are not confirming this new high, gave us 5 waves down, but that's okay. They don't have to be flats. Because what follows 5, what starts with 5, must end with 5. So you're going to get the same 5 waves down for a zigzag. And the market will all confirm this 5 waves down all at once. And then that will be the end. But right now, it's only the middle, which, in my view, for my personal trading. I'm not going to tell you guys what to do. You do what you want. I'm just passing off my opinion and showing you my personal analysis. Me, I'm loading up right now. Loading up on cash. I am selling everything. Because I want it at this price. Or this price. Not this price. Why do I want it at that price? Let's say we make this low exactly. Just for sake of conversation. Okay. And then after that's all said and done, it's like, and I put out another video and I'm like, you know what? I think it's time to buy the Dow Jones. Let's say you bought the exact bottom, which nobody does, but let's just say you did, for instance, right? Probably you're going to buy it more up towards here, right? So let's be a little more realistic about it. 20,000-ish, right? 20.7, whatever it is, right? Just to get back to where people are buying now is an 84% move, right? I can get 84% on my money by buying cash right now. So that's what I'm going to do. It's a lot of cheddar. 84%. It's my personal take on it. You do what you want. You can think this is full of shit. But you should probably hit that follow button in case it turns out to be right. So you can hear what I have to say next. Till next time, folks. That's what a B wave looks like. Consider the Discord. We talk about this stuff all week long. Videos are exclusive. Post exclusive videos. They all get early access to this one. So you're watching this one late. Because my Discord members already seen it. They already knew. They already have this information. You're getting it late. Wavecounts.com. Check it out. Until next time, grab a whiskey, throw some ice in the bottom of that glass, relax, take a deep breath. Have a good one.